us, but we have the capability to participate in creating a new world order for ourselves, our descendants, our community, that represent the world that we would like to see, the order in the world that we would like to see, or at least the order in the world that is emerged from some degree of revelation. And that's what I want to talk about. An order that is liberating in the proper way and not enslaving.
Soldier Boy Dre.
Everybody, Richard Art here, and my $3,000 Valentino Rockstud purse, my $3,000 Prada jacket, $2,000 Prada shirt, $2,000 or $3,000 Prada pants, Prada glasses, Prada hat, Prada bracelet, and it's all nylon, so the haters' tears fall right off.
We made it. We made it. Hey. Damn, we made it. We made it. Hey. We made it. Hey. We made it. Hey. We made it. Yeah.
Yo, 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 yo. Yo, what's good, jams? It's Asher L. What's up, people watching? It's been a long time since we've had a stream. Just checking out Drake, Crypto and Down. I don't know what episode this is, jams, but it's good to be back. Definitely wanted to get one in before the end of the year, talk about things that are happening in the crypto space, culture, sports. But I know we haven't talked about it in a while, but considering that we just heard Drake, did Drake win that beef with Kendrick or no?
Yo, yo, yo. What's up to all the crypto rascals out there? Long time no see. It's your boy Jams checking in. What's up, Asherel? Who won the beef? Have to go with K Dot, Section 88. Good kid, Mad City. He's definitely made us proud in his beef with Drake. But we're here to talk crypto. We're here to talk financial markets. We're here to talk cultural events. We're here to talk politics. We're here to talk news that you can use. Make sure that you follow us on Twitter at Crypto and Down. Make sure you follow us on YouTube. We are live there now at Crypto and Down. Asherel, man, a lot of updates since we've last been live. I agree with you. I don't know what episode it is. Either way, we back like we never left, man. Good to see you.
Yeah, definitely good to be back. Well, for this episode, I wanted to keep it sweet and short. Hopefully people out there watching can get some good insights, like you said, the news that you can use. So we're definitely going to dive into, like we always do, just do a market highlight, dive into some stories, and then maybe just have a little bit of discussion afterwards. Maybe recap what we've seen happen this year, particularly in the crypto space. The markets are down right now, but there could be hope moving into the next year as well. So definitely want to give some tips and insight. And I just also want to hear from you what you're looking at right now with market being down. And then we can talk about, are we in a bear market with maybe we haven't seen the bottom yet, or just maybe a little dip in the bull market that people are talking about. So definitely want to get your opinions and insights on that. But first and foremost, let's take a look at the markets. I know we were talking about the markets here on the green screen, what we were seeing here, but let's do that real quick. Take a deep dive there.
Let's do it.
All right, bet. Like I said, it's been a while since we've streamed, so I'm still going to have to get all things buttoned down with the transitions and whatnot. But let's take a look here. We have not used the block before to check prices, but I like the way they present things. We can take a look at tokens. We can take a look at ETFs, at stocks. But let's take a look, maybe going through the top 10 from Bitcoin all the way down to Ethereum. If we wanted to, we can take a look and see what's happening pricing wise. Well, how are the market caps and also the volumes for these particular tokens? And then maybe let's point out some of the highlights that you see as far as we look at right now, from 1 all the way down to 10 at Doge spot. We see everything is trending down. 5% for Bitcoin. I think this is tracking over the last 7 days, if I have that right. Oh, sorry, we have it set to the last day. So down 5% on the day. Doge here in the number 10 spot, down 7.96% on the day. But Jams, I'll pass it over to you. What are some of the things here that you've noticed in the market, and some things you're looking to at for as far as Bitcoin and some of the other ones?
Absolutely. So I want to zoom out a bit and first start with Bitcoin. Since we've last streamed, Bitcoin has made an all-time high of $126,000. And as you can see at the top of that chart there, Bitcoin basically made a double top of 126,000 and has been in a precipitous downside ever since. And just here on the year, down 7%. So if you held Bitcoin for the last 52 weeks, you are down 7%. However, if you did sell the top, you are up almost nearly 50% on you would have been up nearly 50%. And so this is a period where there is risk off or risk aversion. But I do think it's interesting to see who has performed well over the last year versus who hasn't. CZ up 33% in this last year. And what's also some strength is Tron. Tron up 36%.
Well,
so Justin Sun and
hey, I don't mean to cut you off there, but if we were saying who's performed well, both of these men, I think, have definitely done deals with this current administration, done, open deals, secret handshakes. CZ got his pardon. So if we take a look at, you say, what's trending up over the past year between Justin Sun, Tron's blockchain, and BNB run by CZ, both of these men, I think they made some good business decisions, and it looks like their coins are paying off.
Absolutely. Down drastically, much like many other meme coins, Dogecoin down 66.7%. Cardano trading like a meme coin also down 64%. I think you're going to see Cardano fall out of the top 20 here in the next 12 months. That'll be my prediction. Cardano is frankly pretty useless. I don't want to call it a dead chain, but truthfully, there's no need for Cardano or the foundation or the use of.
And we can stop hearing from Charles, right?
Yeah, I mean, he can be an advisor. He can be a consultant. He can help provide strategic advisory decisions, but we don't need Cardano. We can do without it. XRP, I think, is interesting, as they still have their argument of, we're the crypto for banks, but I think stable coins are going to make XRP useless as well.
For sure. And I wanted to highlight some of the coins that you went and maybe just think about this overall. It's been a while for sure since we've streamed, since we've talked about this publicly as far as the markets. The top 25 may have switched over a lot more than the top 10 that we see. But I think if we look, we can take a look and see what's been trending up over the past year, and then tie that and correlate that back to this current administration, the rise of stable coins, and try to extrapolate what's going to happen in the future and how that's going to impact these particular coins. But if we wanted to take a look and dive into, like you said, Solana, Tron, BNB, both those chains and business models seem to be very well incorporated with stable coins, which the current administration has definitely made an effort with the passing of the Genius Act to push And we see with their Treasury Secretary Scott Bessent talking about how stablecoins could be widely used to fund the U.S. debt. So a lot has changed since we last streamed, and we'll probably do some more insights probably outside of the top 10. But it's just quickly kind of, I think, worthwhile to note here what's interesting about the top 10 particularly, and how that they ties in into, you could say, the new era in the crypto space with the new passage of bills and laws, maybe giving some clarity to how crypto will be used with U.S. businesses, banks, fintech firms, and whatnot moving forward.
Could not agree more. And I think what is very telling to me here is if we look at the volume in the last 24 hours of, let's say, our top 11, because I want to include Cardano in that. So scroll down to Cardano if you don't mind. Cardano in a day has done about 777 million in volume. Dogecoin has done 1.2 billion. Take it with Tron, about half a billion. Now, Solana's done 5 billion in volume in a day. 5 billion compared to Cardano's 777 million. So we're almost talking 8x the volume on Solana to Cardano. When we look at volume compared to BNB and Solana, BNB's are number 3 by market cap, but has a third of the volume of Solana. XRP has, you have to add the volume on XRP and BNB to equal the volume on Solana. So to me, there's a clear winner here. It's obvious who it is just based off volume and activity.
Yeah.
If we were to exclude our first movers of Bitcoin and Ethereum in our top 10.
And what does that, what can that tell us? Volume being how much you'd say this particular token is being transacted back and forth between individuals. I'm sure, yes, we could say bot trading could make up a majority of the volume for all of these coins. But what do you think? What should we take away from that volume metric? I think one we can take away, they're just more used. One, the usage, as it's, I think, one thing to look by market cap, but looking also by volume. And if you wanted to take a look at Bitcoin and Ethereum, we could say, and then even Tether, if we're comparing stable coins, a digital US dollar like USDC and Tether in the third spot, and then the sixth spot, looking at their volume and comparing it to a blockchain like Solana, or you could say the platform like BNB and their token. What are some of the insights that you draw out of the volume metric, as far as them being passing back and forth between individuals or entities?
Absolutely. So I'm going to give a shout out to at AIXBT _agent, AIXBT, one of the great AI agent protocols inside the virtuals ecosystem on Base. Follow it on Twitter or X. As here are some recent tweets that I want to highlight. Solana captured 57% of wrapped Bitcoin trading volume across all chains. Let me say that again. Solana captured 57% of wrapped Bitcoin volume across all chains. Ethereum and Base combined can't match it. Bitcoin holders aren't just holding on Solana, they're actively trading. So sub-second finality beats 15-second blocks every time. So accrues value from every BTC swap. Here is another very interesting data point that I want to bring forward as well. Solana on-chain, so USD volume exceeded Binance, Coinbase, and every other centralized exchange combined last week. 5.5 billion USDC minted in November alone, creating permanent bid liquidity. Traders save 10 to 100 bits per second per trade, going direct to Jupiter and Orca instead of centralized exchanges. When 2 billion ETF requires continuous on-chain execution for creation/redemption, the marginal price setter moves permanently. Binance lost control of Sol price discovery and can't get it back. So what this means to me is that Solana is no longer a degen play. It's no longer an ecosystem exclusively for meme coins. It means that there are serious Bitcoin traders trading on Solana. Solana just integrated with Monad, which launched last week. Solana has lots of DEX innovation ongoing. Solana also still has a thriving meme ecosystem. Solana has the real world asset infrastructure play going for it as well. It has AI agents. So when we think about a robust cryptocurrency representing a ecosystem with dApps, DeFi, lending, gaming, memes, it's all there on the Solana. On the Solana ecosystem. Yes, there has been problems in the past. Is any cryptocurrency safe? No. But if I were to pick one to hold for the next 5 to 10 years, Solana will be one inside of my portfolio, and it is one that I'm currently staking, earning up close to 5% APY just for staking Solana and believing in the ecosystem long term. So that's my pick in the top 10. If I were to go out on a limb, which is very odd considering we were saying the opposite 4 years ago.
I was just about to say that. I remember we were chuckling and laughing when they had outages and
yeah,
the price dropped from I think it was
$200 to $2.
$200 to $2.
And we were
I'm sure, yeah, we were kikiing.
We'd be retiring. We would be retired right now if truly we did not laugh at the Solana ecosystem.
Hey,
that's so shout out to the Solana boys.
You know, man.
I learned my lesson. However, when Solana's back to 250, 400, 450, 500, I'll be there to sell my rewards and be very happy about it. But I want to mention one more tweet that's very important. What should a core stack look like in 2026? For your layer ones, it has to include Ethereum. It has to include Solana. And you have to think about scalability. And when that comes in, that could be the new Monad. It could be Arbitrum. It could be Base. You pick. Then we have to think about real world assets and infrastructure. Your major institutional players are on chain now, meaning Fidelity is here, Charles Schwab is here, BlackRock is here. All of them are on chain at this point. And so you want to be able to not only reap the value from that, but participate through interoperable integrations. Chainlink and Ondo, those are my two real world asset infrastructure plays. Chainlink all the way, Ondo right behind it. And then when we're thinking about DeFi, like lending is huge now. Aave, we were just talking about the app earlier this week. Aave is the premier DeFi lender on Ethereum. I think it's trading at about $170 a coin now. And so Aave would be the gold standard. They do have buyback as well. So I very much so looking at acquiring Aave through this bear market. And then two more that I'll likely be acquiring as well. I like Jupiter on the Solana platform. And then I also like Helium as my DPIN. I think Helium Mobile, for anyone who actually owns a cell phone or has a teenager, they should 100% be on Helium Mobile. And it's the same network as T-Mobile. It's literally as cheap as can be, and you earn crypto just for paying your bill, and you help support the network by being a customer. So, Helium, long term play. Link. I would also watch Hype. Hype is a perpetual DEX ecosystem that seems to be doing, pretty well as well, and may end up surviving long term. But that's a 2-3% of portfolio play. Nothing serious. Real portfolio should consist of Ethereum, Solana, Chainlink, and those sorts.
I'm gonna
Blue
put you on.
chips.
I'm gonna put you on the spot here. We're working on a newsletter that I'm hopefully gonna drop next month. So, could you send me those coins or those
Absolutely.
tokens as your picks, and then I'll do a little summary. We can do a little summary on them and drop it in there, just as like and highlight it as Jam's top picks for right now. So you don't have to. I can go back and listen, but just structure it however you want it. So I want to drop that in there for the people, just so people can have some insights into how we're thinking, trends that we're particularly watching. There are a lot of things going on, but with both of our lens and our view, I like the way you kind of talked about the different blockchains, what you're looking at, depending on how they're integrated with the big financial institutions, what they're doing, maybe so on the decentralized side, and then also how that ties into, we could say, the real world assets and the connection to when you're talking about your decentralized infrastructure as well. With when you're talking about with what was it? With helium, that one. So
Absolutely. Yeah, I think a newsletter is pertinent and important with top picks. As there's a lot happening, just a few more quick tweets that I've seen over the last few weeks. Solana added 634 million in real world assets total value locked this year to 807 million total. BlackRock's Bill Fund grew 768% quarter over quarter. Circle minted 6.75 billion USDC in October alone. PayPal's PYUSD crossed 1 billion. All this happened at SOL $134. So infrastructure is getting built in this bear market. You have BlackRock investing heavily into their Bill Fund. You have real world assets increasing quarter on quarter. And here's just a couple of other reasons why price hasn't reflected all of this building that has occurred. BlackRock dumped 616 million Bitcoin and 200 million ETH. However, go ahead.
Before you go on, actually, I want that was going to lead me into my next story that we had. So you were actually saying something that, and I don't want to cut you off, but
No, you're fine.
I think it's important that we show maybe some graphs. I don't know if you're looking at the same thing here to back up what you were saying, talking about how's the price going down with Bitcoin in the market and why that may be. Yes, we saw the shutdown. Retail may have to sell to pay. People may have to pay their bills. Holidays are coming up. There's that. But when you were just touching on and talking about BlackRock and talking about these big corporations and companies and banks selling off, this one I thought was, I don't know if you were talking about this specific one, but this I think is a good highlight to what you were saying as far as when it comes to the ETFs, the net sellers of Bitcoin and these digital asset treasuries being these huge companies that maybe are offloading. So go continue.
Absolutely. So BTC has basically pulled back 30% from all-time high, while BlackRock's ETF has become their most profitable product, and wells are accumulating heavy. However, retail is selling ETFs, and so they're bleeding left and right until the ETF inflows become positive versus outflows. then you will continue to see price drag no matter what the external catalysts are in the market. And then at the same time, from a macroeconomic standpoint, we're waiting on quantitative easing. And so the Fed, Jerome Powell, is set to meet in December, and we could see another quarter basis points rate cut, which the market could potentially see a bounce back from these local lows where we find ourselves now. So as long as these ETFs continue negative, meaning more money is coming out than going in, price will continue to suffer. Although we are seeing lots of building, we are seeing innovation happen with these institutional companies such as Fidelity launching a Solana ETF last week, which kind of went with no fanfare, and a Chainlink ETF launching this week. You know, there's a lot of cool things happening that in normal cycles would likely be a catalyst or a moment for positive momentum in the market. Nevertheless, there's so much volatility in this current structure with ETF outflows driving
Yeah.
that we just really aren't having that Q4
Mm-hmm.
boost that some people were predicting. We could be very much so in a bear market, and people are just in denial on that. But we'll see.
Yeah. Let's give well, this graph is from Crypto Quant, but shout out to Julio Moreno. You can follow him at JJC Moreno on X. I keep wanting to call it Twitter, but just giving some insights into what Jams was talking about with those ETF outflows, particularly with Bitcoin, and then you can also people can look at Ethereum. So with things that have happened since we last talked, digital asset treasuries, there are companies like MicroStrategy, Michael Saylor, and people advertising, hey, buy into my treasury, don't buy Bitcoin directly. It's interesting to see how these things have had a huge growth. There may not be enough retail people to buy. Corporations, we'll see how this Sol ETF performs. But another interesting insight here and graph I did want to highlight and show, and talking about the business model of these particular, if you want to call them digital asset treasuries, people who are basically buying cryptocurrency, and then you can buy into their company with shares but not buy the cryptocurrency directly, which kind of goes against what we talk about and preach as far as best practices, or why I want to get involved with crypto in the first place. But from Portfolio Labs, they did a interesting breakdown, I think, here. If they say the chart below illustrates the hypothetical performance of a $10,000 investment in Bitcoin, BTC USD, and MicroStrategy Incorporated, MSTR. The values are adjusted to include any dividend payments if applicable. So here you see in the green, if you were to buy directly BTC, say $10,000 worth, and then here with the yellowish, dark yellow, MicroStrategy. So MicroStrategy, what they do, for those of you who don't know, MicroStrategy and Michael Saylor, their CEO, he could say is the Bitcoin maxi. To me, he's a big grifter, but what he preaches is, I think he once said, sell your house, buy Bitcoin, go into debt, buy Bitcoin. But he's buying Bitcoin, and you can buy shares in his corporation. But it's interesting to see if you had bought BTC here in the green or bought from him, you would see how much you'd be down right now. If we want to track over the last 6 months, or if we did year to date, a little bit different of a metric here, but if we could see all the way down and let's say and cap around November 27th, you may be down 3.1%, 3.71% if you bought BTC directly, but you'd be down 38% with the same investment into his company. So some things interesting to be aware of with their business model, and how it may not be the best model once if BTC drops any further. Insolvency may be on the horizon.
Yeah, I've heard about some pressures on MicroStrategy and Michael Saylor's strategy around Bitcoin as a treasury, and if they should be treated as a fund versus a publicly traded company who just also happens to be a software company who holds a lot of Bitcoin, or are they truly a Bitcoin fund? One other point before we get out of here is people have to start thinking about the macroeconomic pressure versus the institutions that are buying Bitcoin. As we mentioned, Bitcoin has dropped 30% from all-time high. We've seen 500 million liquidated today. There are fears in Japan about their rates, and that's triggering a risk-off period. However, we are seeing that while liquidity is taking time to flow from Bitcoin down into altcoins, the altcoin cycles of previous years likely will never happen again. What I mean by this is the broad reaching liquidity that pumped every coin up thousands of X's after Bitcoin dominance fell probably won't happen, because a lot of that retail money that flooded into, let's say, Hex, for example, now have the option of keeping their money in a brokerage account, let's say Robinhood, and purchasing a Bitcoin ETF or a Solana ETF and capturing that same return without ever risking or playing the degen game of meme coins or alts. Not only is it safer, it's probably smarter. In addition to that, altcoins of before without utility will truly be useless and be thought of nothing as early market rug pulls and scams. And people need to now know that 99% of altcoins are officially dead. The game has changed. It's time to be selective. It's time to look at the fundamentals of the coin itself, whether that means the fully diluted market cap, the circulating supply, the actual volume, the number of DApps, how big is the ecosystem, how many wallets. These things truly matter now that the markets have matured and you have big time institutional players betting billions of dollars with billions of total values locked, where any distraction is a waste of time.
Yeah. I like what you said there. The days of, let's say, 2021 to 2022, say end of 2020, all the way to 2022 are over, probably with a massive influx into these different cryptos. And what we could probably say is whenever the middle of this summer, end of the summer, when the Genius Act passed through Congress and they set the rules around stablecoins and who could mint stablecoins and what type of companies were allowed to do that between fintechs and banks, that probably introduced a whole new ball game, and we're moving into a different realm where, like you said, it'll be safer for people to invest through their brokerage accounts, but crypto will just become another boring financial vehicle or product. The volatility won't be there to the upside and also to the downside. So people will say yes, mass adoption, but with the creation of these ETFs, it does take away, you could say it probably drags the price down over time overall without having those high flying upswings that we were accustomed to, or people may have been accustomed to maybe all the way since 2013, if you want to look at Bitcoin, and or 2017 with a lot of these different altcoins that have come out. So I think I would agree. I would agree with that aspect there as well. I don't know if you have anything else to add, but I wanted to touch on two other stories.
You're good.
One that kind of touch along the lines of crypto, financial institutions, and where things are headed. Because I do think what we're seeing now is blockchain can be utilized in different infrastructure. You talked about utilizing it for your cell phone, for Helium. We'll probably take a look and deep dive too as we start to do more streams, how it applies to different industries that we are both involved in professionally, whether that's the supply chain side, things that are happening in the e-commerce side as well. I'm going to touch on that towards the end of this episode. But for people watching who may not be so familiar with blockchain, cryptocurrency, I would probably want people to take away what is going to be happening in transition. It's one thing for us to talk about the price movement and things to invest in, but I think we would like to highlight too how the underbelly or the infrastructure that encapsulates the entire, we could say, payment system that we utilize in the back end that we don't actually know about when we're swiping our cards, taking money out of our banks, sending money to people. That whole infrastructure is changing, starting to pick up pretty rapidly here this year. And then when it comes to the investment side as well, say your brokerage account, your Fidelity, your Charles Schwab's, your Vanguards, that underlying infrastructure is changing too, to be faster and more efficient on these large corporations and banks on their side as well. So the opportunity for huge gains that we saw in the past are not going to be there. So it may take a little bit more strategy and insight into what you're trying to accomplish to, let's say, get financial gains or be involved, because the digital infrastructure around these different companies is being more efficient and they're going to save money, but that money that they're saving may not necessarily be passed on to us. If we think about how we deal with our banking systems, what we do for payments, for our checking versus our savings accounts, or even for our retirement accounts as well. So I think that's one of the key things I would like people to get away from this, is just the changing infrastructure, the unseen digital aspects that happen between the large corporations to make payments seem somewhat seamless across the internet, or in person, cashing checks, writing checks, sending cross-border payments. That whole infrastructure is changing rapidly as well. And there are also going to be new or more popular, trendy financial, let's say, tools going to come out there through centralized platforms as well. But I did want to highlight too, talking about brokerage accounts, Robinhood and Polymarket are two interesting companies. Polymarket, and we were just talking about the blockchains of Tron and Binance. Both of those gentlemen who own those blockchains have worked with the current administration, the Trump family. When it comes to the Polymarket side, I believe Don Jr. is on their board now. They were just granted approval to have predictive markets in the United States. For those of you who don't know, I think predictive markets, I'm still learning about them. They're interesting. We could say it's betting, but not betting, where people are able to, let's say, place wagers or predict by putting their money up what is going to happen. We could say pretty much with anything. You can have a question about who's going to win the next election. When will the Russia-Ukraine war end? Will it end this year? And then people can bet what they think is the most likely outcome. What I think the interesting insight that we can maybe get from predictive markets is that if people are putting their money up on certain predictions, we can probably get a truer sense and estimates for how the outcomes of things, because if you're putting up money for something, you don't want to lose that money, so you're probably going to try to bet on information that you have, whether that's inside information or maybe just general insights that you have on a particular trend or something, just to be able to know and predict things. So in a way, predictive markets that are being integrated through Polymarket, that was a popular one over the past few years, and now U.S. customers are able to use that going forward. Or Robinhood coming out with their predictive market, there's a lot of what I see people being able to place prediction and wagers on things in relation to sports and entertainment and politics, but it could be predictive markets could be utilized for anything as well. So that's an interesting, I think, infrastructure aspect of not necessarily what blockchain is being going to be utilized for. It can be, and we'll talk about some of the different blockchains that are doing predictive markets. But considering that Robinhood, Polymarket are some of the leaders, you could say, in this new financialized system that is targeting younger people, offering different unique value propositions, no trading fees, onboarding and inboarding off of crypto. So I think that's something I wanted to highlight too, is things people should be aware of that are happening.
I love it, man. That is a perfect use case. Not only is it timely, but it's relevant. It's exactly what's happening in the market right now. And I'm seeing more and more conversation about it. And actually, I just went to Kalshi, Kalshi, for the first time today to check it out. I did not place any bets, but I did want to understand more about the predictive markets and how they are actually based on the blockchain and how they work. So I love this use case. This is a live game right now. It's 20-17. You can bet that the Denver Broncos are going to win the game. Bet $100, win 168, or you can bet that Washington's going to win. Bet 100 and win $224. So this is sort of a integration of um, the Nate Silver political polls mixed with um, your DraftKings, mixed with your Robinhood. So whether you're a sports nerd, a news nerd, a financial guy, uh, DJ and gambler, seems like predictive markets is where a lot of conversation is going to happen and a lot of information is going to be derived as we will be able to, like you say, gain insights into how people think outcomes are going to happen. And there's no better way to determine that than asking someone to put their money where their mouth is,
Exactly.
because instead of them just spewing something randomly on Twitter or X or Facebook with no skin in the game, here their money is their vote. And one other thing I thought was interesting is looking at the amount of money that's put down on each individual one. Um, People thought that this meant that, or at least I did, this is something that I learned over the weekend, is in these prediction markets, or specifically Kalshi, you aren't betting against other people. You're actually betting against the company itself. So that is something that I need to understand more about before I, you know, use real cash,
Yeah,
because, you know, there's a lot of ways to lose your money, whether that be stake.us or, there's gambling sites galore. So prediction markets is a great use case, one that I need to study and spend more time on, which I started doing, over this past weekend, coincidentally. But that's an area. And then I just want to talk about one other use case really quickly that you mentioned, which is interoperability and infrastructure. Infrastructure is the key word here. Um, UBS runs, UBS, the bank, runs live production fund workflows on Chainlink right now. This is as November the 17th. Not a pilot, actual money moving through their Hong Kong regulated infrastructure. Link trades at the time 1386. It's like 1225 now. With exchange supply at 3-year lows, 1.8 trillion AUM, bank trusts the tech for real deployment. Market prices it like a 2021 ghost chain. This is real infrastructure. This is actually happening. JP Morgan settling tokenized treasuries with it. Central banks using it for cross-border settlement. Grayscale calling it core infrastructure for real world assets. So when it comes to real world adoption and a ETF and multiple large institutional banks using it for infrastructure and interoperability for cross-chain movement, there's a clear winner in my eyes, and that's Chainlink. Price doesn't reflect it. However, own the tools, own the backbone. I've learned my lessons from 2017 and 2020. I'm not learning that lesson again.
Oh yeah, for sure. Lots of lessons to be learned. Just along the lines of we were just talking about Kalshi is what will be utilized in the Robinhood for their predictive market. When you were talking about the infrastructure, and you made a good point about yes, you're betting against the company when it comes to these predictive markets. I want to tie this back to blockchain as well. So, Truth Network, TRUF.network, they're the ones also who they're brought to us by Truthflation. If you've been watching us over the years, you know this when the Truthflation first came out and we saw an increase in inflation. We were utilizing Truthflation, which is associated with Truth Network, pretty much the same company, to talk about. We were using Truthflation to talk about actually real metrics when it comes to inflation and giving a good breakdown about what was the percentage up year over year, month over month, and what particular categories were trending high. So those particular people have brought us the Truth Network, and this ties into predictive markets as well. If you can see, it's made for anybody. They say anything measurable becomes a market. The Truth.network blockchain connects verified economic data, attested settlements, and apolitical data that powers AI with real censorship-free truth for builders and markets that demand transparency and trust. So blockchain can, we could say, solve the problem of when we're utilizing these predictive markets or betting. When we see Polymarket and Robinhood, if we're betting against a company, they could have insider information that could be swaying and funking around with these predictive markets. So the idea of what Truth Network is trying to do is eliminate that middleman where we can verify all the data sources coming in. You as an individual, if you're a developer or person, anything can be anything measurable becomes a market, so to speak. So I think this will just give more transparency, and that's what blockchain can do. When we see the downsides of some of these centralized platforms, more popular and bringing in creative ways for us to do finance, different things, and bringing that straight to us as laymen. For me myself, we do see there are alternatives here for builders and people out there in the blockchain space. So we'll talk about this particular one more, but that kind of highlights what you were saying about the infrastructure. And we do see that, let's say, dichotomy or friction between the big banks, the centralized players building their own blockchains, jumping onto public blockchains, and then when you were talking about looking at things that have specific use cases, you may not see that price appreciation in the midterm or near term, but maybe if you wanted to stick with something over the long term, as they build and continue to carry out this particular ethos and as a guideline and a beacon within all the scams and the noise, if you identify those particular products or projects that are doing something, you could say that it's actually providing value, some type of value to the market. The price may not be there at first, but you could at least show your support with crypto and blockchain by buying their token. It makes it a little bit easier nowadays. So it is one thing I think to look for immediate gains, but it's also another thing to see people who have a specific use case that solves real world problems for what some of these centralized platforms have. And then, obviously you may be expecting a return, but just so to say, there are ways to put your money where your mouth is.
Could not agree more. And just to encourage those people looking at price and worried about the state of cryptocurrency, Texas, Greg Abbott, the state of Texas, bought 10 million of Bitcoin last week. Anybody hear about that? Probably not. But Texas bought 10 million of Bitcoin through the IBIT ETF at 87K, becoming the first U.S. state to purchase a ETF wrapper. And this is for regulatory compliance. So it's not direct custody, but they do own 10 million of Bitcoin through the IBIT ETF. Wyoming, Florida, Arizona bills are in committee. So while 2.35 billion in retail money fled the IBIT ETF in November, sovereign states are entering. In addition, Harvard made their largest portfolio holding at $442 million of what? Bitcoin. So the largest portfolio holding in the Harvard endowment is IBIT ETF Bitcoin. Wells Fargo added 383 million. Abu Dhabi Investment Council now holds 517 million. BlackRock ETF IBIT saw 473 million outflow the same week from retail. Endowments are accumulating when ETF traders panic. The split between 20-year money and 20-day money creates the setup. So we are seeing a divergence between large institutional players who are accumulating lots of ETF shares, lots of Bitcoin, lots of Solana, lots of Ethereum, while retail traders are selling due to the macroeconomic pressures that they find themselves in. Hold the line. Do not sell your bags. Institutional players are buying them for cheap. They are going to ride this storm out. You're going to see Bitcoin at 150,000. Well, people thought 100,000 was going to happen, and we saw 126,000. So who the hell is saying 200 is not going to happen? 250 is not going to happen. Yes, we could see a pandemic. Yes, we could have a world war. Yes, there could be a nuclear bomb. Yes, there could be all kinds of crazy things that could happen that could affect the price. However, building is happening during these periods. The indicators are there to say you need to be consistent in your dollar cost averaging. You need to buy the dips. Even if price does decline 50, 60, 75% on your blue chips, you aren't holding shitty altcoins. You're holding things with billions of dollars of real world assets tied to them, with the largest financial institutional players in the world thinking that these are the right coins. I'm going to take that bet so that I look back in 5, 10 years with no regrets.
Yeah, not financial advice, I would like to say.
Not at all.
Down doesn't provide financial advice, but just good insights for educational purposes as well. So I think Will said good points. All right, here's the last story that I wanted to touch on real quick. This one was from CoinDesk, and it says Swedish buy now, pay later giant Klarna rolling out stablecoin with Stripe's bridge. So what does that mean essentially? So if you purchase on e-commerce, or I could say now probably maybe even with Walmart, or I don't know how they're doing it in store potentially, but and now it's funny, buy now, pay later is you could even buy food with it, which is kind of crazy. But buy now, pay later, or the pay in fours. If you have PayPal, you've probably seen that. You're able to buy something and then pay for it in 4 installments. So basically, buy now, pay later. They're introducing the company Klarna is introducing a stable coin. So basically, what the idea of this is to help reduce their cross-border payments. They say their fees add up to around $120 billion a year, and The company Stripes, which helps facilitate payments online, they have their own blockchain or system for utilizing stablecoins called Bridge. So, sorry, it's called the company is called Bridge, and the blockchain that they're utilizing is called the Tempo blockchain as well. So this kind of comes back to the infrastructure of these different financial companies utilizing blockchain and stablecoins. And for those who don't know, stablecoins basically we could say are one for one a digital US dollar that run on a blockchain essentially. And with the Genius Act that passed through Congress earlier this year, it just basically outlined what are stablecoins, who can mint them, if you do have stablecoins as a company, what do you have to have in reserves backing that stablecoins. So basically it said that if I were to create a dollar utilizing a blockchain or US dollar token, I would have to go and buy a US treasury, and I would not be able to use that US treasury for speculation. I'd have to have that in reserve as a backup to that stable coin. So a lot of companies now are, since there's more clarity since this act passed, are starting to utilize stable coins to help with cross-border payments, and you could say utilize all types of ways, maybe even to scale businesses as well. So the CEO of Klarna, Sebastian, I think I'm saying this correctly, Siemiatkowski, he's a co-founder. He said, crypto is finally at a stage where it is fast, low cost, secure, and built for scale. So that's interesting. Something happening on the back end of this infrastructure where these companies now who are at the, you could say, the bridge or at the forefront of how we're utilizing e-commerce, paying for things, they're starting to utilize stablecoins as well to save money on their side, particularly in the cross-border space as well.
Could not agree more. That was a prediction you were certainly right on. That stablecoins is the area to focus on. Saw some FUD today surrounding Tether, just something for the crypto rascals to be aware of. But another area where you were spot on, privacy and Zcash. That was the biggest narrative in Q3, and did see the biggest gains. So technically, Asher, you're supposed to be retired twice. Once off Zcash and once off Solana. So we're gonna hit it this third time, and we're gonna be out the game for sure. They ain't gonna see us streaming no more.
I'm not making any promises, man. Yeah. Yeah. We'll do one time. We'll have to go back one of these episodes and just
we call some winners.
all our misses. Yeah, we love
some winners though.
Wins, but we we had a few misses as well.
We did.
We can't predict the future. You never know how things are going to change out. So I would say, yeah, take everything. We do our research and try to bring you the information as best as we understand it. So I think
sometimes we're too early. Sometimes we're just too early. Like there was no way for us to know that Solana was going to become what it became.
Well, yes, I would agree. And the criticisms that we had were more so on the performance side.
They were valid. They were technical criticism. Yes. And they're valid.
And we could say, yeah, they did have the backing of some of the big billionaires out there. So we can't say it's not huge of a surprise considering they have backing and the connections. Because probably that's what it comes down to when these different decentralized platforms are being developed and integrated, and companies are looking to save some money and utilize a particular blockchain. If it's not for Ethereum, may still be where the volume is at, where the market cap is, and Solana could be in that second place, and it's somehow working off of them. So, but I do think, it is one thing for things to have a valid use case, and then another thing for the price to perform as well. So those things don't always go hand in hand as well, I would say. So, but I would say before we leave here, definitely send me over your lists of some of your coins. Just give me a brief breakdown. I can do the rest. I just definitely want to include Jam's insights and kind of how you think about, since we've gone through Q3, even taking a look back at the rest of the year, what you're looking forward into 2026, and pairing the different types of blockchains and how they're going to work together, and what some of your picks are, so we can get things pen to paper, give the people a little bit more insights here, in written form, and then look back and track and see where we're at as we go forward, which will, I definitely think, help us to shape our opinions and our outlook.
Awesome. We'll get that over to you this week, in preparation for our next stream next Sunday. Shout out to you for keeping us going, keeping crypto and down alive. Looking forward to our nightly Sunday night streams. Gonna get this back out, YouTube, Twitch, Facebook, Twitter, get our motion back in motion.
The motion back, yeah. Hey, it's all right if we're only on a couple of places. We can't be everywhere at once.
Yeah, a little co-founders.
Let's get back in the groove a little bit.
Yeah, exactly.
Practice. So
exactly, a little out of practice, but we'll get back. I'm about to go get in the bed, man. I'm tired.
Yeah, man, I feel you. Well, I appreciate you checking in with us. Anyone watching out there, live or on the rerun, and Jams, I appreciate you as always. And on that note, we will catch y'all later. Good night.
Peace.
A new world order is upon us, but we have the capability to participate in creating a new world order for ourselves, our descendants, our community, that represents the world that we would like to see, the order in the world that we would like to see, or at least the order in the world that is emerged from some degree of revelation. And that's what I want to talk about. An order that is liberating in the proper way and not enslaving.
Soldier Boy Dre.
Everybody, Richard Art here, and my $3,000 Valentino rock stud purse, my $3,000 Prada jacket, $2,000 Prada shirt, $2,000 or $3,000 Prada pants, Prada glasses, Prada hat, Prada bracelet, and it's all nylon, so the haters' tears fall right off.
We made it. We made it. Hey, damn, we made it. We made it. Hey, we made it. Hey, we made it. Hey, we made it.